Whoa, whoa. So this is the VIX. We're looking at the VIX. We're looking at volatility here and the vol of vol. Volatility changes in the volatility graphics itself. So this is what the VIX normally looks like. Flat, boring, low. And this is what the VIX looks like now in our crash. And let's draw some lines here. We get 20 and 28, 5. Yeah, 23. Okay, so what we got here is on the S&P, we got a downward A, B, C, Elliott wave down, and then we got a 1, 2, 3, 4, 5 Elliott wave up, and now the S&P as of last Thursday looks like it's turned over down, and we're looking for the next wave shape. And so what has the VIX been doing? It has been going nuts. So from the beginning of this crash, it was going up, and once we hit this dead cat bounce, the VIX went crazy. And then once we hit our not even down all the way, just this whole leg down to the bottom, the VIX was just getting nutty. And now we've had a decrease as we've gone on our bull trap here. We've had a decrease in the VIX here. And I just wanted to show some technical analysis type of things here on the VIX is we have this pretty clean and clear consolidation area on the VIX, and I've shown the MACD several times also. So if you look at the VIX on the MACD, like on the dailies and things like that, you can see that the green side of the MACD, like the bull side, it's doing like stair steps down to lower and lower volatility from here. And if you look at the red side of the VIX, the red side, so the green side did like a step, kind of down, and the red side of the MACD has been diverging. It's been increasing away from the middle line. The MACD has been increasing down, and then it has been kind of going back to even on this side. And this looks like a signal of a split here, and then I don't know if the green side continues to step down or if it starts stepping up on the MACD. But that's the kind of look that we're getting at the VIX here, is that we just finished this down move and we just got a breakout to the upside, and the VIX looks like it's ready to go back up right now, which means a worse investment environment for long stocks in general. The VIX goes up during crashes, and if the VIX is going up, that doesn't look good for holding stocks. And this is not investment advice, but this is one of the only charts across hundreds of individual stocks in all of the sectors, tech and every sector, tech, industrials, energy, consumer staples, REITs. We're getting reversal patterns in all the stocks and all the sector ETFs, and all of those have their topping patterns kind of here. We're getting double topping patterns, or we're getting parabolic reversals, or we're getting island top reversals, and we're getting consolidation zones on all of those, and we're getting all the support levels broken and back tested, and we're getting giant bear flags across all of the sectors on the S&P and on the stock market. And the VIX, we're getting one of the only bull side breakouts. And Bitcoin is not determined yet. People are looking at Bitcoin like, is it going to go? Well, I don't know. We'll see what Bitcoin does. It hasn't made a move yet, but the VIX has made a move, and most of the other stocks have made a move. And it looks like the VIX is going up, and the other stocks are going down right now as of Friday. This is already painted on close Friday. We're not getting any pre-market here. This is just as of Friday. And yeah, okay, so that's a general look at the VIX. I'm Brian Lewis of MMT Investing, and things just changed. And the VIX, we'll look at vol of vol. So just the volatility is just the height of the VIX. And the higher the volatility goes, that means you're going to get more vertical crazy movements in the stock market, but the vol, which is the volatility in the VIX itself, always smashes that like button right now to help me out with the YouTube algorithm. Well, the vol is when you get more choppy movements in the VIX itself, and it's usually when it's going up, it gets choppier. And the vol just indicates that the stock market is crazy and unsafe. So during this crash, the volatility was telling us that crazy stuff is happening. And now it's kind of calming down here. And you see it takes a little while to build up, and we got a big bump in the VIX on the dead cat. And then leading into the crash, it was a precursor to the reversal, which is a good thing to point out here, because we got the bottom here. So this kind of top, there's a sort of an island top reversal in the VIX here. That all happened prior to the bottom turning around. That all happened here. And that is a really cool leading indicator. And then also here, this spike in the VIX precursed this dead cat bounce, because we got lower VIX on the bounce. So big changes in the VIX and a gap here. We got a gap in the VIX up here before the crash. So we're getting a gap up in the VIX right here again. So the VIX is a really, really good leading indicator. I really like looking at the VIX and the MACD, and I like looking at Tesla, because the VIX will gap and it'll go volatile before you get crashes and reversals, and you get this island top, or sort of, it's like a gapped, I mean, not exactly an island top, but it's this gapped reversal pattern that happens before this big reversal here. So that's a great leading indicator on the VIX, that we're going from a high volatility, horrible investing environment to a lower volatility, more stable bull trap environment here. And then we get this gap up here, and we're looking for something similar to this, but maybe not as high, but we'll see what it does. But we're looking for a similar wave down here. So we get this corrective 3 wave, or this ABC, we get the ABC wave here. Off of the everything bubble crash, we get the 1, 2, 3, 4, 5, the impulse motive wave here across on the bull trap. And then the most expected thing here would be to get another 1, 2, 3 corrective wave down, and that would be a C wave on a larger ABC pattern. So we get an ABC pattern on top of the A and on top of the C, and this 1, 2, 3, 4, 5 is across the B. And then we also saw a 1, 2, 3, 4, 5 on this little b, and we should expect a 1, 2, 3, 4, 5 on this one as well. So these are the areas that we're looking for, and there should be another bull trap, a smaller bull trap here, just like there was a smaller bull trap here, and this was our huge bull trap. And then yeah, I guess that's pretty much what you'd see out of the VIX. And this should be a similar kind of look in the VIX. We should probably get a little spike into the bull trap here, over to wherever that is, and then get crazy VIX towards the crash. And then I'll point out here that this bottom is the end of a 3 to 4 month credit contraction cycle. And once we get here, this is a reversal of entire market fundamentals. From a credit contraction down phase, we're in a bear market, we're in a credit contraction down cycle, which does a drawdown, a bounce, and a bounce in general, and a bear market that's generally downhill. And we're switching, it will still be a bear market condition, but it's going to be a credit expansion here in a bear market, which is going to get a pretty big bounce and probably level off, that kind of shape over 3 months, 3 to 4 months. So that's the cyclical model window, the Elliott waves inside of the cyclical model. And then you can get in and do technical analysis around reversal points and around the edges of the waves. And the technical analysis makes way, way more sense if you have a whole framework for what the thing is doing in the first place, rather than just looking at one point and being like, oh no, there might be a triangle, like maybe it'll go somewhere from here. But if you can see the whole shape of the cycle, the technical analysis is a lot easier to use because the cycle and the Elliott wave patterns are going to predict an up here. There's nothing about the technical analysis pattern itself that says it's going to go up. It just says that we broke the current pattern and something's going to happen. So that's VIX. VIX is the volatility. Volatility is how vertical the movements are that you're going to see in the stock trading. And we've seen some very big up and down moves here. Volatility is high. And then the vol is just how crazy the market is in general. And so it's calmed down here. We've gotten back up to a calmer spot. And now we'll see if the volatility starts kicking up again, or if we just get boring stuff forever from here after the biggest drop in history and the biggest bounce in history. So probably not going to see calmness after those two moves. I doubt it. And that is the bottom line. Happy trading.